What's up guys, and welcome to Wall Street Millennial. On this channel, we cover all things stocks and investing. In this video, we're going to go over the greatest gains and losses on the WSB forum from the past week, so we can learn from other people's experiences. Before we get into the video, we'd like to thank our channel members who get access to these non-time sensitive videos one day in advance. They also get to vote on some of our video topics. First off, we have user Paco D, who lost 99% of his portfolio, or $35,000 playing MVIS call options. He owned calls expiring on May 21st and May 28th, with strike prices ranging from $17 all the way up to $40. On May 21st, MVIS closed at $13.87, well below his lowest strike price of $17. He still owns some May 28th calls, which are far out of the money. With only a week left to go, the most likely scenario is worthless expiry and a complete loss. MVIS calls made up the entirety of his $35,000 portfolio. With the stock's unfavorable price action over the past month, he lost almost everything with only $427 left in his account. A couple weeks ago, his investment was briefly in the green when MVIS spiked in an apparent short squeeze. Instead of taking profits, the OP thought that there might be some favorable news for MVIS brewing. He held his calls in an attempt at diamond hands. Unfortunately, Microvision did not announce any business developments and the stock started to rapidly drift down over the subsequent weeks. This resulted in a total loss for the OP. We wish you luck on your future trades. Next off, we have user iFish, who is down more than $8,000 on his GameStop short position. He bought two 10-strike puts expiring on July 16th for an initial cost basis of $14,000. GameStop's current price of $177 is well below the strike price of $210. However, GameStop is extremely volatile and thus the implied volatility of the puts are very high. He had to pay a significant premium when he bought the puts, and thus his break-even price is $70. GameStop will have to decrease more than 60% over the next 2 months for his put to expire with a profit. He thought the WSB users pumping up GameStop's share price would eventually run out of money, and the stock would fall back down towards its pre-squeeze levels. However, he drastically underestimated the diamond hands of the apes, which have kept GameStop's share price in the $150 to $200 range over the past few months. Despite the eventual failure of his position, the OP actually initiated the short at exactly the right time. He bought the puts on January 27th at the height of the short squeeze. In February, GameStop fell to a low of $40, giving him a significant opportunity to close his position for a massive gain. Unfortunately, he got greedy and thought GameStop would continue to decline over the next few months. This led to his current situation with an $8,000 unrealized loss. This shows the risk of betting against Wallstreetbets meme stocks. As the economist John Maynard Keynes says, the market can remain irrational longer than you can remain solvent. Next off, we have user Jamil Star, who posted a shocking $1 million loss on a Disney YOLO. He owns 300 $200 strike calls expiring on July 16th, and 400 calls of the same strike price expiring in January of 2022. Between the two positions, he is currently down almost $590,000. In a separate account, he also owns 220 strike calls expiring in January 2022. He is down $420,000 on that position. Altogether, this brings his total Disney losses to a grand total of $1,030,000. Disney stock has enjoyed a strong rebound from the pandemic lows, and its current price of $172 a share is 24% above the pre-pandemic levels. The OP was expecting the strength to continue, so he made the decision to YOLO more than $1 million into calls. However, the pandemic is lasting for longer than he expected, which is putting pressure on Disney's theme parks. And Disney Plus is still in its early stages and thus needs some time to mature. Despite these headwinds, the OP is still confident in his position and expects the stock to start flying on Monday. His calls still have many months till expiry, but he decided to lock in his losses and sold out of the position shortly after making this post. We wish you luck on your future trades. Next, we have a 6-figure gain on options trades made on Microvision, SPY, and Carnival Cruise Lines. User RGR111 held May 21st 24 strike calls on Microvision, May 21st 410 strike calls on SPY, and Carnival Cruise Line stock. Microvision has had an insane start to 2020, up from $2 6 months ago to as much as $25 a share at its peak in April. This WSB user was able to take advantage of a recent doubling of the stock price to make $50,000 of realized gains in one position. The SPY has also had a strong start to 2021, although not as much as Microvision. Still, after a strong 9% run, this trader was able to make even more money on his SPY calls, $55,000 of realized gains. His final holding, Carnival Cruise, is the weakest performer of the three, trading in a sideways pattern for the past several months. However, this trader bought stock instead of options on Carnival, which allowed him to avoid losing money to theta decay on options and still make a cool 5% on the position. Off a large initial investment, that translates to a $16,000 gain. Some people immediately noticed that as of today's prices, the microvision trade would have expired out of the money, more than wiping out all of the OP's gains. However, the OP confirms that this screenshot was taken during the microvision short squeeze, and he was able to sell at the top. If he hadn't sold then and held till expiry, the calls would have expired more than $10 out of the money. Likewise, his SPY calls would have still been in the money, but less so, and the OP would have likely lost money on that play. This is another case where we see that although sometimes Diamond Hands pays off, other times it pays to take some profits. Next we have a huge gain on microvision alone. User Demhoyas has been holding microvision since May and is still holding to this day. As a result of his extremely overweight portfolio concentration in microvision, his cumulative account balance has closely mirrored the price of microvision. The average cost basis of his investments is about $10, and the position was built up about a month ago. It is now worth more than $55,000 worth of gains for this trader. Based on an estimated cost basis of about $10 and microvision's current share price of about $13, we can estimate that for every dollar that microvision goes up, his portfolio gains about $20,000. Microvision peaked at about $26 late last month, which is $13 a share above where it is now. At that time, the OP's microvision position probably would have been worth several tens of thousands of dollars more than it is now. He says it still hurts that he didn't sell any at the peak. However, with $55,000 of profits as of today, anyone would call this trade a win. Congratulations on your gains. Next we have user Felly Brown 2 with some insane gains made on GameStop. 4 months after the legendary GameStop short squeeze, this trader has found a way to continue extracting 5-digit weekly gains on the stock's movements. Instead of buying calls on GameStop, he bought call spreads instead. In particular, he bought 130 contracts of the 155-160 strike call spread expiring last week. That means that he bought the 155 strike call and sold the 160 strike call. By doing this, if GameStop closes above $155, the OP gets a payout based on owning the 155 strike call, but the payout stops growing above $160 because he is also short the 160 strike call. Therefore, the gains are capped. The benefit of this strategy is that by selling the 160 strike call, the OP dramatically reduces theta decay and also reduces his cost basis. This is how he was able to enter into 130 contracts. Based on the closing price of GameStop on the day of expiry, the 155 strike call was nearly $5 in the money, giving the OP a payout of $5 a share or $500 a contract. However, his short 160 strike calls were just barely out of the money, meaning that he did not have to pay out anything on those calls. So the $5 per 155 strike call minus his cost basis of about $1, plus the premium that he received for selling the 160 strike calls goes straight to pure profit. Multiply that by 130 contracts and the OP ended up with $43,000 of profits from this trade alone. That's a quadrupling of his money in just 1 week. In his own words, in a comment that had 69 likes, the OP's reasoning for doing call spreads on GameStop is to avoid theta and implied volatility crush. By using the spread, he protects himself from all the options Greeks that can eat away at gains. Congratulations on your impressive trade. Alright guys, that wraps it up for this video. If you like the content, make sure to smash that like button and subscribe for future videos. Also, make sure to check out our second channel, WSM Research, where we post DD on high growth stocks. As always, thank you so much for watching. Wall Street Millennial, signing out.